Ladies and gentlemen, welcome back to the Garden State Growth Show. Today we have a very special guest, Ethan Max, who has an interesting last name. He gets a lot of flack for it. Ethan, tell us about that. What's going on with the last name?
So we were just talking about the last name because every time I tell people what it is, they either get upset because they think that I misheard the question and I told them my first name.
Right.
Or they actually just don't know how to spell it, which I think MAX is a pretty simple
right?
one. Yes.
So confusing.
Confuses a lot of people. So
And I feel your pain. I'm a Jan Michael McClintock. I just tell people my name's John. You know what I mean? When I make a reservation at a restaurant, I just bypass my real name. They're like, John, 8 o'clock, you're in. If I say Jan Mike, they're like, what? No. They're like, no, we don't have any reservations available.
sometimes it's more fun though, just to give out that full name. Be like,
a good icebreaker.
Jan Michael. I'm like, this guy must be important.
Like I am.
Yeah.
Yes.
Sorry. Anyway, back to the show. Ethan is the founder and managing principal at Vincorra Properties. Am I saying that right?
That's correct.
$8 billion plus in assets managed. They focus on multifamily between 10 and 25 million.
For now.
Okay. Willing to go higher?
Oh yeah.
Always. Greg.
Hey, I got
Greg,
you.
are you willing to go higher? That's the
I can
question.
go. You tell it how high, and I'll do it.
I love that, Greg. That's why we're here together.
Ethan, so explain to me what you do. I'm 6 years old. What is that? What does this mean?
When I was 6
No,
years old, or
like I'm
in the
6
past
years old.
Oh, I see.
For people don't understand asset management, what is it?
So it's funny you actually ask that question because when I interview people, that's one of the questions I ask. I ask them how to value a property and what they think asset management means. And my answer to asset management is always the business plan creation and execution of a real estate asset. In my case, as an asset manager, I come from a background where the assets are already existing. So we're not building it from the ground up, but it is already out there in the market. Maybe it doesn't need any immediate renovations. Maybe it needs substantial renovations. But really what we're doing at Vincorra Properties is looking for multifamily value add assets that have returns in the range that our investors are looking for. So for Vincorra Properties, we really target like a 15% or higher IRR, a 2x equity multiple, and a 8% stabilized yield on cost. So if I could achieve all three.
What is the IRR? What does that mean?
The IRR is an interesting one. So it really is, it takes into account the time value of money with your kind of annual returns. So if you make 100K of profit in year one versus year two, the IRR in year two is just going to be lower given the additional time that's involved.
So hold on, let me guess what this means. Is it investment return rate?
Internal rate of return.
Close, Greg.
Super close,
That's
dude.
very close.
Think
You had no idea what it meant.
what is this?
I'm not going to lie. I knew what it meant. And when you said it, it sounded so right that I could have been convinced.
It's almost, maybe use my definition if you want.
I will.
So that sounds awesome. Before you got into that, let's go back in time, Ethan, if we can. What was your first job?
So it's funny, right before on this podcast, Greg's like, we're going to go back in time. We're going to talk about your first jobs. And I'm thinking about, it's like, what was my real first job?
That's right.
And my parents have a house out in Long Island, and it's a very intimate, small community. And I was thinking about, like, my first job was I would go out in the common areas and take out the trash. And me and my younger brother would do that. And I think that same summer, we would take out trash and we would water plants for a bunch of old people who were just didn't want to water their plants, and they were renting out their houses, and they didn't trust the renters to water their plants.
Oh my God.
And that's where you come to save the day.
I came to save the day, and I think they paid me like $15 a day to water the plants.
Hey, that's actually pretty good back in the day. Come on.
Dude, I thought I was so rich.
What year is this? Like 2001?
No, I would have been. I was born in '97, so I wasn't qualified. I wasn't qualified to water plants.
Wait, how old are you?
2001.
We forgot to ask that question.
So this must have been, I don't know, 2008,
Okay,
probably around that time.
What a
when
great
it
year.
started.
the Obama
Great
years.
Yeah, I was lucky.
This
to,
is a recession at this
not
point.
be in there.
The market crashed. Ethan comes in.
I take
He's
out
like, let me
trash
take
and
care of the
water
plants. Let me at least take care of the plants. I can't help you with the stocks.
Oh yeah.
Okay. So, how long were you doing that for?
Occasionally for some summers, and eventually I actually started coaching tennis lessons out there, and then that was like my next job.
No way.
Is this the Hamptons, by the way?
No, my parents have a house out in Fair Harbor,
Okay.
in Fire Island, so similar to the Hamptons.
Cool.
But a lot of fun. I
Yeah.
spent essentially like my whole childhood out there during the summers,
That's awesome.
and it's like my special place now. Fucking love it.
That's
Bleep
amazing.
that out. I don't know. If this is a
No,
family-
we're keeping it.
a family
We're keeping
podcast.
this thing.
So, tennis coach.
Yeah,
So you were like a semi-pro tennis player?
I wish. I was very, very good in
Varsity
high
level?
school. Yeah, but I didn't play in college,
Okay.
and sadly enough, I just like didn't continue. I haven't played like since then.
No way.
Yeah, so I need to get back.
Dude,
into
we
it.
should play.
We have to play.
That'd
I
be
gotta-
so good.
I like looked at my rackets recently when I was back at my parents'
Got to
house.
string it.
You're
Those strings.
You're gonna
are
hit it,
loose.
it's like, and it
Yeah,
explodes.
no, it's literally just like spaghetti on there right now.
Oh my god!
I love
You ever
spring.
play racquetball,
No, I haven't.
dude?
Because I'm like, why would I play racquetball if I could play tennis? And then I don't play tennis. So
The wall doesn't hit back.
yeah, exactly.
That's true.
Yeah.
I did racquetball in college a bunch. It's actually surprisingly a good workout once you know what you're doing.
I know it.
Sprint side to side. I couldn't.
Sweating.
I'm not good at velocity changes today.
Yeah.
But back then, there was a lot of bandwidth for that. But today I think my shins and my femur would just like go two different directions.
Oh yeah, that's fair.
Yeah.
Honestly, probably same here.
Yeah, so we need to not do that. So I guess you went to college at some point.
I went to University of Virginia and graduated there in 2019.
How'd you end up in Virginia?
You want the honest reason?
Yes,
Absolutely.
that's why we're here.
I had a great time in high school, a lot of awesome people, but I was like, man, I'm so sick of these Westchester kids.
Yeah,
I gotta get the hell out of here.
yeah.
And you know what would really be the cherry on top? Some nice Southern blondes.
Wow, I hear you on that.
And
go.
I was like, oh wow, Virginia works, and I could still drive down there, be there in like
Right.
a day or home in a day if
Just
need
far
to
enough
be.
away.
Far enough away, but close enough that I am still kind of familiar.
Mm-hmm.
And really, like when I did the tours of the school, like I fell in love. It was gorgeous. The people were wonderful.
Yeah.
And ultimately, it was just the vibes and the general success of the average person there that really drew me to the school.
Awesome.
Amazing.
And-
What did you actually graduate with?
So I graduated with a degree in economics and entrepreneurship. And the entrepreneurship minor, actually, it wasn't even a major, was incredible in just kind of like the mindset needed to kind of bring me to where I am now. And I think I always had that mindset. So I gravitated towards that even when I was in school, but I didn't know what I necessarily wanted to do while I was at UVA. The econ major was just as valuable as anyone's econ major, which is not that valuable. But
Checks a box.
checks a box, makes me legit enough that I can get a job in finance or
Yeah.
business or real
Algebra
estate.
1 and 2 nailed it.
Oh, I wouldn't say nailed it, but good enough.
I was good at algebra, but once I started getting into the words, I tapped out.
Oh, it was statistics that was just throwing me for a loop where I was like, well, I'm glad everyone else is doing so bad. It's really helping that curve.
The
bring it up
average
there.
that can bring you down.
Exactly.
So, any internships where it kind of piqued your interest in real estate? How'd you kind of make that transition? What'd you do right after college?
So my first internship was at a cryptocurrency hedge fund.
Get the hell out of here.
That's amazing.
You're showing your age.
Summer
That didn't exist when I was in college.
and quite frankly, that didn't even really exist when I was interning there.
Yeah,
And it was
that's awesome.
it was part of the challenge to kind of get that mainstream while I was there. And crypto was so new.
What
that-
year is this?
This is summer of 2018.
Okay. Yeah.
So really the whole point of my job was to go to networking events, learn more about what was going on,
Mm-hmm.
and then just kind of applying that knowledge the next day when I'm in the office and marketing the product, because clearly like I don't have any hedge fund experience as a college intern. So really what I took away from that internship was just how to talk to people, how to network, how to put myself out there. And I love chatting with people anyway. So it was awesome. A lot of quacks at that time. So you never knew who was serious and who wasn't.
Right.
And I remember going to some events with my dad at the time, who was also kind of getting wrapped up in that industry. And there was one event, and we were just talking about it the other day. And this guy's like, "This is Bitcoin. It's generational wealth. You're gonna make so much money from it." And I'm like, "I'm gonna put some money in there." And I think I put like $100.
What's the price of Bitcoin at this point? Like $5,000.
So what's today's date? The 14th, 13th?
No, the 19th.
Today's the
The
19th.
19th. Holy cow!
Way off.
I'm so off. So on November 19th, I think it's right around 90K.
Yeah.
And I think it actually dipped below 90K a couple days ago. But I put like $100 in 2018. At the time, I thought it was so much money.
Right.
And when
$100
Bitcoin eventually went up and hit like that 20K, I looked back in there and I was like, dude, I gotta be so rich. There's gonna be so much money in here. And I think it's worth like $500. And I was like, well, I had the right mindset, the wrong amount of money.
Yeah.
But no, it was awesome. And I remember like that guy at the event who we thought was like didn't know whether to believe him or not. I think is worth like hundreds of millions of dollars right now.
Wow.
And there's other people worth zero, but like at the end of the day, like I'm actually very bullish on crypto as a whole.
You're still investing in it?
Really?
Totally. Yeah.
So what?
Consistently, like eyes closed, like just buying Bitcoin every month?
I have just kind of like automatic deposits that go into a lot of different crypto and ETFs as well that are non-crypto related. And it really started off 50-50. And my crypto portfolio has now outperformed my traditional like stocks and ETFs by so much.
Significantly.
Yeah, that I'm still putting it in 50-50, but crypto is just doing so much better as a whole than the ETFs.
And wait for the next 1 week when the ISO comes out.
Oh yeah.
And then it's just, then the whole floodgates start coming through.
What's coming out?
So the ISO 222, right? That's what it is. So it is basically, it's the Genius Act is officially going to click. And now you're basically going to have all these institutional funds be able to actually come into crypto, like XRP and whatnot, and to be able to actually have the 401ks to be going there legally and to have the actual like the railways, if you will, of what is legally able to be done within crypto.
You know, I wasn't even aware about that, so that's fascinating. My brother's in crypto now, and he's the crypto pro in our family. So I'll pick his brain on that.
Yeah, because I would. Everybody I've been doing it's the XRP is basically going to be switching everything around.
Yeah,
and that is going to be when it comes to like real estate, for instance, tokenization and able to get funding. You have to wait for 3 weeks to close on a home or a house or a building or whatever.
I can't wait till title is smart contracts.
Yeah,
you know, to where it's just instant. How much easier would that be?
It would just be so easy.
But got to be careful. Fraud, of course. You know, imagine some hacker gets in there and gets all your, serial numbers for the crypto.
What's really going to be interesting is just how liquid real estate's going to be as a result of crypto's implementation. And I'd love to see that in action. I don't want to be the first one to do it. I want to see other people do it first and then get involved in there. But I think it's going to be really interesting. And I wonder how investors are going to want to adopt that as well. Because as the actual buyer, I only see pluses coming from that. But if you're someone and you just have like 100K in your pocket, you've never worked in crypto before and you're not familiar with the blockchain, I'm curious how that sort of person's going to adopt it.
I would say within 5 years. Once this ISO comes up by 2030, 35 that's where everything starts like really taking shape.
Yeah.
Oh, basically it's like Bitcoin right at $1,000 to where is it now? Like it's crazy.
Yeah.
Like XRP and so XRP is basically for institutional funds. XLM is going to be more like PayPal, Venmo, if you will,
Yeah.
peer to peer. So all these things are going to be happening more and more. It's even crazier too. In Jersey, there's like over 300,000 homes on the blockchain.
Really?
Mm-hmm.
What?
Yeah.
I didn't know that.
That's awesome.
So like you just don't know it, but it's already happening without you even knowing it.
Wow.
And it's more adoption. It's more the governments actually start to actually comply with everything and like showing this is how you need to be doing it and how it's legal and how everything. And so once you have all those rails up, it's almost opening up a floodgates of a dam.
I love it.
And you just
I love it.
let's go.
Yeah.
So
It's going to be interesting how politics play into this because a lot of countries manipulate their currency valuation for trade and everything else. So it's like, if you take that away, like, is there going to be some revolts going on, around the world where the currency's crashing? They can't support their citizens anymore.
Well, you do see like in a lot of those countries where the currencies are being manipulated or greatly inflated as a result of just like poor governance, that a lot of those people are relying on crypto as their primary currency or just black market dollars. Like you look at countries like Argentina, like where that's happening, and Bitcoin and other cryptocurrencies are going to be massive there. And you see them in other countries around the world as well. And if you can get that sort of money into real estate, I think it's like a perfect intersection.
It's a great way to diversify.
Yeah. And I find the mindsets of those two industries, if you're a founder, there's a lot of overlap. And it's a lot of people searching for financial freedom. And I find that a lot of real estate investors and crypto investors are very similar, just with different skill sets for the most part.
exactly.
So that's eventually kind of what brought me into real estate.
Perfect segue.
Yeah, I guess so.
Look at the alley-oop right there.
We went from XRP peddling to real estate. So how did you make that switch? Like how did you go from that internship into where you are now?
So I go into my senior year of college and I'm just not too sure what I really want to do. I like crypto. I wasn't an expert in it. Like I was still so new, and there weren't really any real jobs at the time that weren't coding related. And I wasn't a coder. So I'm applying to some firms. There just aren't really any gigs out there. So I'm really starting from scratch, trying to figure out like what sort of route I want to go into. And it wasn't until I remember it was like April of 2019. I'm graduating in May, where I'm chatting with like one of my best friends from college, like his dad. I'm like, well, what does he do? And I meet him and we're chatting about it. He's like, oh, I'm a real estate developer. It's like, well, tell me more about that.
Yeah.
And I was introduced to some brokers, some lenders, and just trying to figure out where in real estate my skill sets matched the most. So now I'm just networking like crazy.
Yeah.
Just setting myself up with phone calls all the time, going into offices and just kind of like chatting and learning from these people and people on their team. And I'm just obsessed in the meantime. And I'm like watching YouTube videos constantly.
Yeah.
And at the time, I
Who's
remember
your biggest influence right now at that time?
I was going to say, I remember I found like Graham Stephan.
Oh,
and
I thought you were going to say Grant Cardone.
and meet. No. Even at that time, I'm like, okay, I don't know what's going on here. I remember I was watching Graham Stephan and Meet Kevin when they were both like fully real estate focused. And I was like, I can buy real estate too. So eventually I'm realizing in order to buy real estate, which was becoming my goal at the time, I now need to find a job that sets me up the best in order to basically successfully own and operate a real estate asset.
Yeah.
And I'm like, okay, like maybe for me then that isn't brokerage. Maybe that isn't being a lender. And I start narrowing it down to acquisitions and asset management.
Mm-hmm.
And I'm realizing that these asset managers just know so much. Like, like they have every single stat on all their properties. They know market, they know what's going on. And I'm like, okay, I think I'm going to go asset management.
Hell yeah.
So now I finally understand what I want to do. And it's June, a couple months later, and I get an interview at a company called DLC Management out in Elmsford, which is in Westchester, New York.
Okay.
And I'm from Westchester. And I'm interviewing there. I love the team. I love the strategy. They were a suburban retail shopping center owner operator of like massive anchor tenants and then like a bunch of shops on the side, like that sort of vibe.
Gotcha.
And I get an asset management role there as an analyst on their team, where that was really where I was able to learn kind of like all of the baseline real estate knowledge that I have today.
Wow.
And I appreciate that experience so much for kind of them taking me in with zero real estate background.
Yeah. How did you decide where to go, like to get fast track that knowledge?
You know, it was just through conversations, and I realized I really needed a asset management job, as I kind of mentioned.
Right.
And they were willing to take a risk to hire me.
Right.
I needed a job, and I liked all the people that I was speaking with.
Gotcha.
And oddly enough, the founder of that company was the father of someone I went to school with, and I didn't make the connection until I actually like applied to that job.
Oh, nice.
And I think that helped me get it a little bit as well. But it was
Sure.
nice to have that connection there where I instantly felt welcomed and I felt comfortable kind of just asking all the stupid questions right out the gate.
Yeah.
And having DLC as a tool in order to really build that baseline knowledge that I needed
Mm-hmm.
was phenomenal. And while I was at DLC, I actually started testing those real estate investment skills. And that's when I also acquired my first property, which was a 3-unit out in Danbury, Connecticut.
Oh, nice.
So,
What year is that?
so this was in 2020. It was September of 2020. I remember I like just turned 22 and we closed on it.
Wow.
Nice.
Yeah.
Congrats,
So,
man.
That was an awesome experience. So I'm still holding that now. Planning to sell it pretty soon. Obviously, purchasing it during COVID, when everyone was like scared to leave their house,
Right.
made it like almost a steal.
Yeah.
So I get in at around $350K, 3.5% down since it was an FHA loan,
Mm-hmm.
and I only came in with like $12,500.
Oh my God.
And the seller was like so thrilled that someone was looking at it that he paid all the closing costs.
Oh God.
So
Is
that
this
was
like
it. I'm in-
March
I'm in those now.
2020?
Yeah, pretty much. And I was in at like a 2.7 interest
Oh my
rate
God.
What?
Yeah.
Why would you
Hey,
sell?
why would you sell?
because this is what happened. I did the work needed to be done. I had one of the units vacant. It was like technically mine, but we're renovating it the entire time. So we pulled the CO. Second I got that, I refinanced the property and I got it appraised at what I needed to in order to just have 20% equity in there
Nice.
as an investment.
Wonderful.
So now I have all this equity in the property and it's cash flowing really well. Despite all of these issues that are also going on, which thank God I was an asset manager, I was able to like foresee and just kind of mitigate a lot of those risks.
Awesome.
And now it's worth so much more that if I was to have stable cash flow for the next 10 years, no vacancies, no repairs, like if I sold it today, I'd just make more money than that. So it's just a no-brainer that like it's time to sell. I've launched Vincorra Properties now, which is a new business that I'm trying to grow at more of a commercial scale.
So happy for you.
So that money is just better used somewhere else.
IRR.
IRR.
Greg.
Yeah.
You think I wasn't paying
Dude,
attention?
dude,
And it's brought full circle. Yeah.
Yeah. Velocity of money is important, and momentum. And if you can make more with it somewhere else, you know, of course it's making money as it is, but if you can use that to launch, you know, this new brand and get into other things, makes a lot of sense.
Absolutely.
If you could go, knowing what you know now, if you could go back to when you started asset management, what's one piece of advice you'd give yourself?
I did everything right.
Why does everybody say that?
You know,
I'm just perfect. I'm just perfect.
I went in because I wasn't going in trying to necessarily like climb the corporate ladder, I went into real estate really treating it like grad school.
Right.
So I was like,
Learning season.
I'm going to be a sponge, absorb everything that I can, and just work my butt off. So
I feel like a lot of people make a mistake, do the opposite of that,
Yep.
and try to climb the corporate ladder, try to get a bigger salary, but not actually learning what's necessary.
Foundation.
yeah, like I just wanted to learn. I was like super, super hungry. And I remember even at DLC, which was an entry level analyst job, I spent some of my first 6 months there working until like midnight, especially when it was work from home.
Yeah.
I wouldn't say first 6 months, but once it was work from home as a result of COVID,
Yeah.
I was up like 12 o'clock, 1 a.m., like every other night, working so late. And it was tough, but I didn't mind it. And I didn't necessarily need to work that late. But I was like, I want to get this work done. I want to get these reps in.
Yeah.
And I treated my next 2 jobs the same way, but also just kind of focusing on building that resume and showing that I'm capable of just kind of working at the top of the industry
Yeah.
as well and getting involved there. So if I was to climb the corporate ladder and treat my experience that way, I probably would have told myself to do some things a little bit differently.
Yeah.
But I always had this goal. I always knew that I was going to launch this company. And since I always had that as the long-term plan, I was able to know what decisions were best for me at each moment in order to get to that final goal.
That's awesome.
You weren't trying like, oh, I'm trying to get to the next level in that company. It's like, no. I'm trying to soak every single aspect so then I get to go do my own thing and be the best I could possibly be.
Exactly. So there were times where I was working at my jobs where I would get projects that my bosses thought were like awesome for me. They're like, this is going to look so good for you in front of senior management, blah, blah, blah. And all I thought was, I've already done an analysis like this. I know how to do it. This just sounds like more of what I already know. Like, I'm not going to learn anything from this. So, I mean, there's always something to learn from every project. But in some of these instances, I was like, my skill set isn't growing. I'm really learning how to navigate the corporate ladder of this firm, which was something I wasn't as interested in. So that's why sometimes I felt like my learning was stalled, but it necessarily wasn't. Like, my boss would be like, it's not stalled. Like, this is a great opportunity for you. And I'm like, well, if you knew that I was going to quit and do this, then you'd probably realize it's not as good as you thought.
Yeah. I mean, that just comes down to managing talent and what their expectations are. And, it's with an entrepreneur like yourself, it's hard to keep them confined in one place. You have
Absolutely.
higher standards for yourself. What do people kind of often misunderstand maybe about what you do, or maybe investors misunderstand about asset management, new investors? Because a lot of new investors kind of watch our show. How do you recommend they get started?
How do I recommend a new investor get started? Well, one thing I do want to clarify is that Vincorra Properties isn't really an asset management firm.
Okay.
We have asset management services, but we're really, at the end of the day, an investment firm looking to acquire properties and bring those returns to our investors. So that requires a lot of different hats to wear. You're doing capital markets, acquisitions, asset management. Obviously, I'm going to hire the pros to do a lot of the construction and property management needed. But I'm sorry, I went off on a tangent. Now I forgot your question.
No, it's all good.
Like a new investor.
Yep.
Is they better off kind of starting small, single family home, 2-family home, doing it on their own? Or should they kind of invest in a partnership like you have, where it's almost like a real estate investment trust, where they pool with other people and just kind of watch?
I think it really depends on the type of investor.
Yeah.
And if you're from a small town and you just want some like stable cash flow and you don't need a ton, in those cases, maybe it is better to buy a couple of those smaller units. I've realized through that and through my professional experience that nothing is truly passive if you're the manager.
I agree.
So you might as well go big or go home.
Right.
when I was working at Tishman Speyer and Silverstein, I mean, a lot of the buildings that I managed were billion-dollar assets.
Wow.
And there were days where I'm getting calls from my property manager at my property in Danbury, and I'd have meetings with the property managers for Rockefeller Center and the World Trade Center, and I'd be like, why are these calls taking the same amount of time? Like, like there's the same amount of effort going into both that you might as well do the larger asset. And with so many more units and so many more variables to look at for these larger properties, it definitely requires you being able to juggle more balls. But like at the end of the day, there needs to be more things to go wrong there in order for an asset of that size to go belly up the way that a 3-unit asset can go wrong if one tenant moves out.
Right.
Correct.
1/3 33% vacancy
Exactly.
versus bigger assets have more economy of scale, can have their own property manager dedicated to the space. All that stuff.
So if you're a truly passive investor where you don't necessarily want to acquire it, but you have money that you want to put into a deal, you should absolutely put it into a larger commercial deal.
Gotcha.
And let it sit there, let the partners and sponsors there manage it for you. But if you want to just own a property outright yourself and you're just looking for some cash flow instead of more of that 5-year typical investment plan, then maybe the smaller deals do work.
Yeah.
You hold that, pay it off. I know a lot of people who do that early on, and they say, oh, this house is going to be my child's college fund. And they'll buy like 3 of them. And they're like, that's going to pay for it. And they don't necessarily want to run like $1 million business. So in that case, it's worth it.
Yeah. I mean, common mistake I think me and Greg see is new investors don't realize how unpassive real estate investing is, especially early on when you're doing your first couple. And it really is starting a small business.
Yeah.
Like you're opening an LLC. You have to build a team. You need an attorney, an agent usually, a lender, and a handyman, and all this stuff that goes into it. And that's not passive.
No.
You know?
No.
Although you can generate wealth quicker than just investing in your 401k if you do it right.
Right.
You know, you have to have the right team. So
The right strategy.
we always recommend sitting down with a professional like myself or Greg and building out your team and going over what your goals are and what timeline.
Absolutely. And for me, when I was managing, well, I guess I still am managing, the smaller property in Danbury, I think I interviewed like 11 property managers. Whenever I had contractors, I'd get like 6 or 7 bids to understand it. And fortunately, because of my job, I kind of knew the right questions to ask.
Yeah.
I'd put them through scenarios that I was currently encountering, and I would ask them how they'd go about that. And if I didn't like the answer, it was easy. I didn't work with them. And if I liked the answer, if I learned something new from them, I'd be like, okay, let's take a chance on this person. And obviously, if it's down to a couple, now it goes to whoever can get you the best rate. But I got very lucky with the team that I have there.
Yeah.
And I don't think a lot of people say that. I feel like everyone's got horror stories with like property managers. And I've heard of so many people recently where they're getting scammed by property managers and they're stealing money from firms. And I'm like, holy shit, like maybe I should look at my documents a little bit more closely, which I do. And the numbers there are so small that like it's impossible to like miss something.
Right.
But I got lucky with the property managers. I got lucky with the contractors. And the strategies worked very well. So I'm fortunate that there's no issues there, but I will say I'm lucky at the time that I bought it where this asset was supposed to do well, but quite frankly, it wasn't supposed to do this well. And it was just kind of the timing of the market where I bought it during COVID when rates were low. Mm-hmm. It's still technically not a multifamily, it's a residential. So that post-COVID spike really just appreciated the values on there as well. And I couldn't have predicted that.
Yeah, that's awesome. Great first property. A lot of people can't say that.
Yes.
Good timing.
However, there's a reason I only have one, and the strategy you couldn't replicate. So it's just important to pivot off of that as well.
So what's next for Vincorra Properties, if you can look into the future? What are you guys hoping to get into?
So we're still very new, and we're in a big acquisition stage right now where we're just looking for our first acquisition. And the first acquisition could be 1, 2, 3 properties. We're open to as many as we can get as long as those numbers make sense.
Anywhere in the world?
So not anywhere in the world.
Okay. Let's narrow this down.
I do want to bring you through kind of where we started and where we are now, because obviously based in New York City with a lot of New York City institutional experience, I wanted that to be the primary market. It was my backyard. I know it very well, and I could sell myself here. And underwriting all of the deals, especially over this summer and this fall, really nothing's penciling. And I chat with other investors every day who are looking for similar multifamily value add opportunities in this range, which really my range is between like 10 and 40 million, but I lowered it a bit to 25 because oddly enough, a lot of brokers were like, why is it so big? Like, I'm confused. What do you want? I'm like, okay, let's just start on the smaller end. And if you have something larger, just send it over. But even when I chat with other investors, people just weren't really finding anything. And with the current political climate in the city as well, now investor equity is getting a little more skeptical. So I've moved out of New York City and the tri-state area as my primary market. And now I'm really focusing more on red states with high growth, high job growth, and high population growth in areas that are real estate friendly. So last week I was in Dallas.
I was just going to say Texas.
And yes, I really like Dallas and I really like Houston. And I think that's going to shift to my primary market right now with other high growth red states kind of as my secondary market. Also with New York City, tri-state area as a tied secondary market.
Okay.
So a lot of the deals that I'm underwriting now are in Dallas and Houston. I have a lot of connections down there who are just boots on the ground, project managers, property managers who are able to tour those assets while I'm not there and actually do the day-to-day management while I'm running the numbers and ensuring the business plan's going the right way back at my desk in New York.
Got it.
So I'm super excited. Last week, I underwrote probably almost 30 deals and 2 of them penciled. And I was like, wow, it's like hitting the jackpot on these since I haven't really had deals pencil the past like 2-3 months. And
pencil meaning checks all the boxes.
Exactly. Checks
or
that.
It's in your criteria.
Exactly. When I say pencils, it's hitting all 3 of those investment metrics that I mentioned earlier. So that 15% IRR or higher, a 2x equity multiple or higher, or that 8% stabilized yield on cost.
Okay.
So
Greg, did you write that down?
Oh yeah.
We're recording this.
It's on my website, so check it out.
What is your website?
The website is just Vincorra.com.
Okay.
Part of the reason I picked the name is that
Easier.
there's no other Vincorras out there. Yeah.
Got it. Appreciate you having
Yes, thank
coming
you
on
so
the show,
much.
man. This has been great. We could talk all day.
Yeah.
And we definitely need to have you back, once you get into Texas a little more and let us know how it's going.
Totally. I'd
And
love
finding
to
some
be
deals,
back
too.
once I have a deal to talk about.
Yeah.
That'd be fantastic.
Yeah, absolutely. Well, that does it, folks, for Garden State Growth Show here with Ethan Max. That's MAX. If you want to learn more about his what he's got going on, go to Vincorra.com, Vincorra.
Perfect.
All right. See you later.
See you later.